Good afternoon, everybody. Welcome to the TraderMerlin show. 1 second here as my camera decided to crap out on me right as I start the program, but lo and behold, here we go. All right, maybe it's just because I look so disheveled. My camera said, you know what, get rid of this guy. We don't want to have him on camera. Welcome to the program. Today we're going to talk about yesterday's testimony with Gary Gensler. We'll also look at today's markets. Hopefully some of you caught some of that nice move to the upside. We're expecting a little bit of a bounce, and we got one. Now the question is, will it continue? We'll discuss that here in just a minute. So, as I usually try to steer the show down the path of what people want to talk about, and I could talk about anything, well, almost anything. And Gary Gensler was the only question that I received directly last night, and that was from, let me real quickly bring up my graphic here, which I love it. I got a picture of Gary Gensler just looking shocked and dismay, kind of panicked over here. It says, Grilling Gensler is the topic for today's show. It was brought in from Mark. He says, what are your thoughts on Gensler's testimony yesterday? And I thought, you know what? I may as well bring up my 2 cents on this one because I know many of you watched it. You may have seen different pieces of it. So what I'm going to do is I'm going to go through and play you some of the highlights that I personally enjoyed. Now, I'm not going to say they were highlights, and honestly, I think they were lowlights, because what you're getting here is every time we get a congressional testimony by Gary Gensler, the hostility continues to grow, and rightfully so. Now, you can listen to some of the testimony. I'm actually going to play some of it for you here today, little snippets here and there, where you can hear just the outright disgust from some of our elected officials on both sides of the aisle again. So again, this is a bipartisan thing where they're just saying you're stonewalling, you're kind of a threat to democracy. And I thought he actually got grilled pretty good. Now, at the very beginning of today's show in the chat, of course, I do read through as much of the chat as I can, Skilled Stocksman said, did they really grill him beyond a doubt? Well, never beyond a doubt, but they're making a stronger and stronger case in a very public setting that anyone can log into and watch that the SEC is not doing its job, that the SEC is stonewalling by not sending requested documents to Congress, to which I believe was Davidson said, if you don't send these documents that we have requested months ago, I will send a subpoena to the SEC, and you might be the first chairman of the SEC in history to receive a subpoena from Congress to give us documents. That would be, a shot across the bow. Not a shot across the bow. That's just right into the hull of the boat right there. That, to me, says a lot about the integrity of the SEC. If Congress, which basically elects and controls the SEC, they're the ones that makes the decision that the SEC has to enforce. If Congress isn't getting the answers from the SEC that they're asking for, you got to ask yourself, what is Gary Gensler and the SEC doing? They report to our elected officials. They are beholden to our senators. So if the senators pass laws that say cryptocurrency should be banned in the United States 100%, then it's the SEC's job to enforce that. It's not the SEC's job to start creating rules and regulations on their own without the consent of Congress. And that was part of the discussion that came through today. I thought it was absolutely fascinating. I love it. Noam says, schmuck, schmuck, schmuck. We should get to chants going. Schmuck, schmuck, schmuck. He kind of, if someone was named Schmuck, like, what does a schmuck look like? I kind of think this picture does look like a schmuck. Like if this guy said, hi, my name's Schmuck, you go, I wouldn't think twice about it. Kind of looks like a schmuck. Anyway, the SEC should just stick to football. I agree. Let's go there. So I'm going to play these. Hopefully you can hear them. I will turn up the volume so you can hear it because I do want to play some of the say highlights, but they're actually some of the lowlights, I think, personally, of the testimony. So here's the first one. This is from Mr. Emmers. Now, Emmers, it just has a blatant disgust for Gary Gensler. It's great watching. He doesn't even let Gensler really finish his sentences because I don't know if you guys saw it. How many of you watched the testimony? Just yes or no. Did you watch any parts of it? Tom Emmers gets up there and says, Gary Gensler, I have limited time. I have 5 minutes. I want simple yes or no answers. I don't want explanations. I want simple yes or no answers. Can you do that? And he's like, yes, sir. Not one answer was a yes or no by Gary Gensler. So, for example, Tom Emmers would ask something like, I'm just giving you an example. Gary Gensler, is it safe to say that a vehicle with 4 wheels, 2 seats, and a bed on it could be considered a pickup truck? The simple answer is yes, right? Gary Gensler would go, well, sir, it really depends on, there's a lot of different factors that one should consider. I'm not asking you for your explanation and detailed explanation of what a car is. Does 4 wheels, a cab with 2 seats, motor, and a flatbed on it make it a truck? Simple answer is yes, right? So listen to some of these, and do me a favor, if you cannot hear them, type it in, and then this will be a failed experiment, but I think you should be able to hear these. So, and I'll even play some of the video for you. So hold on here. We'll get this full screen. And here is Tom Emmers. This is one of my personal favorite ones from the entire thing.
Claim my time. Mr. Gensler, despite your years of rhetoric, like today, I'm convinced you are not an impartial regulator. Instead, it's clear that you are working to consolidate your own power, even though it means crushing opportunities for everyday Americans and, frankly, the financial future of this country. Even the federal courts are highlighting the damage you, sir, are doing to our constituents, and they're telling you that you don't have the legal authority to accomplish your goal of squashing competition in the financial markets. Congress has been telling you that too. Now, Mr. Gensler, I believe our great financial system is the definition of freedom in this country. And congressional policies must provide room for the traditional financial system to evolve alongside the disruptive digital asset ecosystem. That said, it cannot be understated that a common theme throughout your career, sir, is your relentless loyalty to the largest financial institutions at the clear expense of innovation, competition, and everyday Americans. I yield back.
I suspect some large financial institutions will not agree with that.
There's no question now, sir. I've yielded back my time.
Ouch. That was brutal. Like, I mean, if you're a patriot, if you're someone who's like America and feeling good about America, you kind of got to back Tom Emmers on that one. Now, the question is, what exactly is Gary Gensler to thwart that competition? I love that he sides with Gary Gensler and says, you are like really beholden to these big banks. Ouch. I mean, that was brutal. Just an absolute gut shot there for Gary Gensler. And you could just see him squirming the whole time. And every time he'd ask a question, Gary Gensler was like, just did not want to answer. So that was the first one. The one I didn't get was from McHenry. And McHenry really lambasted him. But here's another great one. Entertaining, but it also goes back to the core of capitalism. I think you would all agree, and if you don't agree with this, then please let me know why. Type in the chat why you would disagree with this. But I think that part of being the global financial powerhouse, the leader in the world with regards to economy and financial markets, is our ability to adapt, our ability to modify our current systems to better, more efficient, faster systems. And that's really where the progress of growth in financial markets has been just hamstrung. And that's the point that Mr. Barr makes here in this comment, which I love this one as well. This is beautiful.
Mr. Chairman, I really liked your colorful testimony. And you're right, we are blessed with the largest, most sophisticated, most innovative capital markets in the world. But we cannot take this for granted. Even a gold medalist must keep training. With all due respect, Mr. Chairman, if the U.S. capital markets are a gold medalist, you are the Tanya Harding of securities regulation, because you are kneecapping the U.S. capital markets with the avalanche of red tape coming out of your commission. On your climate disclosure rule...
You called him Tanya Harding. Come on, man. That's brilliant. You are kneecapping the U.S. markets. So that was another just brilliant shot across the bow there that I thought was worthy to share with you guys. Now, I have one more. There's a couple more, but I don't want to waste all of our time going through that just because we've got a bunch of stuff to talk about today. And I love that a lot of you said, no, you hadn't seen it, just because I wanted to share that with you and show you some of the pieces. Now, let me go to... is it this one? Oh, there's a couple really good ones. Gary Gensler is not a commodity. Oh, so this is where he was actually asked, is Bitcoin a commodity? We've gone back and forth on this one, but watch the hostility that comes from the chairman of this committee when he asked him this question.
Your view on Bitcoin, you've made comments on this. You believe Bitcoin is not a security. Is that true?
Well, I think the staff of the SEC have also, and the prior chair.
I'm just asking you this question. This is not a gotcha. I thought this was going to be an easy softball into harder questions. Do you think Bitcoin is a security?
No, I think I've said this in the past that I think that it doesn't.
I'm asking you to answer my question now. This is not supposed to be hard.
I know. I said it does not meet the Howey test, which is the law of the land about being an investment.
So it doesn't meet the Howey test. So therefore, it's a commodity. Is that fair?
I would say it's not a security, and then the test is otherwise for other laws.
How about that one? I mean, if he says it doesn't pass the Howey test, then it's not a security, therefore commodity, which he has actually said in the past it's a commodity. So the reason I'm bringing these videos up, and I know it's probably for some of you are going, okay, oops, you're like, whatever, it's old hat, is because this is where we are, right now in society with our regulators and our elected officials. It seems like there's this battle going on, and it feels to me there's some driven agenda by Gary Gensler and the SEC. I just don't see how you could blatantly stonewall and go back and forth on something as simple as what is Bitcoin. Every single person in here, if they took the time, a day, a week, a month, and just studied these things, would have a very clear understanding, not only is it a security or commodity, but all the pieces that function and all the other regulatory aspects of it as well. Yet for some reason, the Security Exchange with over 3,000 employees still can't do that. I feel like it's broken. Now, there is another one, which I'm not going to play the whole thing. I think it's a lengthy one. It's 2 minutes, but let me see. I'll play this one just because he goes off on him and talking about blatant disregards for rulemaking. Now, this is one where they're actually saying, I am calling for your resignation, and I will push for that by our elected officials. This one was pretty strong.
Time as chairman has highlighted two problems, a Gary Gensler problem and a structural flaw in the SEC. And as I told you in April, I proposed a solution called the SEC Stabilization Act. You're making the case for this bill easier every day you are acting as the chairman by doing rulemaking after rulemaking without any regard to the impact of these rules, or maybe that's the feature for you, I don't know. But it's having a massive impact on our markets. I mean, we have markets that truly are the envy of the world, and why would you disrupt them with processes that are driving capital out of our markets? Not because to avoid our laws, but to find some place where they can get clarity, where they can work with a regulator and get a decision and a path forward. So instead of selectively applied, you are short. You're not providing clarity with a rule that's evenly applied. You're intentionally shortened comment periods to limit feedback, and the courts have even called this arbitrary and capricious. You're pushing a woke political and social agenda, and I think abusing your role in the authority of the SEC as covered. So, I think fundamentally, the SEC Stabilization Act would remove the role of chairman. It would preserve the current commissioners, but it would add a sixth commissioner. So there would be no more than 3 from any one political party. And so that would provide a path that would make the SEC do what you're avoiding. Frankly, you're front-running Congress, you're front-running the courts, you're front-running even the own administration, and no one has held you to account for that. I mean, I wish the Biden administration would say you're fired, but the list of folks they need to do that for is long. Congress hopefully will with the SEC Stabilization Act. I yield.
Ouch. Brutal, right? It basically says resign, get out of here. So I think the days are numbered. I won't continue on with this. I could play a lot more. There's one great one where Mr. Torres, who does a brilliant cross-examination, he's probably the most informed one here with regards to facts and statistics. I don't remember which district he is. I think he's New York. But Torres was just going through what's the definition of an investment contract, because it's the investment contract that is where all the problems seem to be arising from. Well, what exactly is an investment contract? This sounds so simple. I think you and I could all sit, have a beer, and just establish what an investment contract is in an hour. This is not rocket science, but for some reason the struggle is real here, and I definitely side with some of these elected officials, particularly the one we just looked at, because you're clearly not doing your job. So fire Gary Gensler. Now Torres went through what's an investment contract, but then he just says, if I went out and bought Pokemon cards, is that a security? And Gensler's like, no, that's not a security. It's like, well, I'm buying it with the expectation of making a profit on it. I buy those cards because I'm going to hopefully make money. He goes, if I make them a token, is that now a security? And Gary's like, oh, well, and it turned into this just completely confusing conversation piece where Gary Gensler looked so bewildered and flustered that Torres just kind of sat back and laughed and cut him off and said, listen, I'm talking now. Let me explain something to you. And it was excellent political work. I thought he did a great job at conveying the point that Gensler is clearly out of his element and has no clue what he's doing. And I don't know why. That's something we'll find out down the road, whether this is a specific agenda he's been told to push and just sit tight in front of Congress and take the punches. Either way, his days are numbered, guys. His days are numbered. But there's two things that should come from this. Number one is, do we lose Gary Gensler and replace them with someone else? Now, while people like myself might rejoice in that, that is not necessarily a good thing because it really depends on who is going to replace Chair Gensler. And it might be someone even worse. Let's face it, at a minimum, Gary Gensler understands Bitcoin. Even though he can't say it's a security or commodity, he taught cryptocurrencies and digital assets at MIT. Which is pretty freaking embarrassing because I created Online Trading Academy's crypto course. I could run circles around him with regards to the information and infrastructure and technology about how cryptocurrencies work, decentralized marketplaces, consensus mechanisms, all of that stuff. I would make him look like a fool in a one-to-one conversation, yet he taught at MIT. I think the filtering process at MIT needs to step up their game a little bit. Either way, he's now made it through the ranks of just about every agency. He was chairman of the CFTC. Now he's the chairman of the SEC. And he still wouldn't be able to tell you whether it's a commodity or security. Kind of remarkable that either you are fooling the entire public or you're just an idiot. And I don't know which side I'm on there. Exactly. Skills Hawkins says you might get someone dumber or you might get someone more radical, right? It seems to me that what needs to happen here is Congress, right? Get these elected officials to get together and say, okay, Bitcoin, Ethereum, Litecoin, Ripple are not securities. Gary Gensler, you have nothing to do with that. Do you hear us? You have nothing to do with them. They're part of the CFTC. It feels like that's where it needs to come from, right? It needs to come from Congress to clarify all this stuff and weed out the BS that's just been going on and on and on and on and on. I feel like if I was given a job, and my job was to perform a task and report to my superiors. And I've now done this for a couple of years now, and I still have not reported to my superiors what they have asked me to do. I should be fired. I know that if I was hiring any one of you, and I've asked you for 2 years to give us some clarity on cryptocurrency, guardrails that the SEC thinks would be important for cryptocurrency going forward, and you have done none of that, I'm firing you. Sorry. It's nothing to do with you personally. I may think you're fantastic people. You're not doing your job, period. Let's see. Congress is driving investors out of the market as well with their inability to govern. Yes, and one of the comments that was made by, I think it might have been Barr, was you're driving capital out of America. You're literally taking people who would start a business here because it's the greatest economic country in the world, and you're saying you're not welcome here because we can't give you the rules and regulations you need to run an effective business safely and just have some security in knowing what the rules are. You know none of that, so leave our country. And they are leaving. They're going to other countries where those rules are clearer and the companies don't have to fear that they're going to get shut down at any moment. And that's a huge problem. Questlog, you're on the right channel, buddy. We're talking crypto today. I wanted to just kind of go through some of the pieces of Gary Gensler's testimony over the past 24 hours. He testified yesterday, and boy, it was some good stuff, especially for those of us who are in the crypto space. For those of you who are politically involved, this was also some pretty good ammunition for both sides, I think. Let's see. I would agree that there is an overuse of the word woke. I think that's getting a little bit overused. If they have 3 from each party on their panel, nothing will get done. They'll just argue continuously. It's a good point, Lori. I thought that exact same thing when the Supreme Court. We have an odd number in the Supreme Court because we don't want them to argue endlessly as well. I don't know. I actually feel like I'd rather give it a shot. I would hope that we start to move forward in an age of understanding, which it seems like we're actually going backwards, where even though you might have 3 from one party on one side, 3 from another party on the other side, that it's not about your political agenda. It's about a technology or a financial instrument that is, if it's unsafe, I don't care which party you're in, you should vote against it. If it's a safe instrument that there might be some scams and some frauds within that industry, okay, then I think that both parties would agree, we'll let it in, but we also need to set a framework around it so that the scam stuff gets cut out. And that's really what they need to do with crypto. If it's a great product and it's something that should be introduced to the capital markets, why would those parties go against each other because, oh, well, you're Democrat, I'm Republican? To me, that's the foolish part of politics right there. We put our party above what's important for the country overall. And again, I'm not making a Democrat or Republican statement. It's just we all, I think, know that there is that battle between them. And I think, Lori, that's your point. If we just have three, well, they'll never agree. And I hope that's not true. I hope that we actually get to a better place where it's about, let's just pass this because it's important, or let's get rid of it because it's not important. Like credit card reform. I can't see how any elected official would sit there and raise their hand and say, no, I think it's totally fine that credit card companies charge people 29%. And the reality is the vast majority of people who are carrying large balances are those that are poor to begin with. They don't have money and they just don't understand personal finance. So, I think, why would you vote against credit card reform? Yet several have, many have in the past, because they were rewarded with shares of Visa when they did their IPO, but that's a whole other story. Correct, Lori. That's the way the Congress should work. You're a glass half full or more half. I don't know. I think it depends on the situation. I don't know if I'm necessarily a glass half full, glass half empty kind of person. I think for many things, I'm a glass half empty. Right? Time is of the essence is kind of the attitude there. If the glass is half empty, if the glass is still full, I could go either way on that. I like to think I'm more middle of the road, and I like to look at things from all perspectives, and I'll formulate my opinion, which might push me a little bit to one extreme, but I certainly am never going to find myself on the absolute extreme ends of things. I think that's just bad for society and bad for you as a person. I think you kind of have to, even though you may not like the other side, the other party, you have to listen to those arguments and see if there's some validity there, and not automatically go, oh, they don't know what they're talking about, they're stupid because they're the other party. I hate them. Yeah. Think about it. All right, let's go to the second step here, which was Gensler being fired. The other part was a letter that was sent out to the SEC demanding that they approve the Bitcoin ETF. And as you've seen over the past 24 hours, or 48 really, Bitcoin's been doing a bit better, right? This is 5 minutes here. Let's go to a daily. Oops, you're not looking at the chart. You're looking at me. There you go. Here is your daily of Bitcoin. And granted, it still looks bad because it hasn't been able to make higher highs. It's just been traversing sideways. Looks relatively weak. But we had a nice pop-up today. I think a lot of this is the result of testimony yesterday, where a lot of people were going after him saying, what's your problem with this Bitcoin ETF? You've got a dozen different companies that are all legitimate companies. They're not fly-by-night. BlackRock's not a company that's going to issue a Bitcoin ETF tomorrow, take all the money and disappear. It's just not going to happen. So there is security there by just the agencies issuing these Bitcoin ETFs. So that was, I think, part of the pop we saw today. And I'll start there as I run through. But I guess the real question is, when are we going to see this spot Bitcoin ETF? I wrote an article back in March or April, and I thought it would happen in August. It didn't, right? Ads will run shortly for some viewers. It says, it just popped up on my thing, in 51 seconds. I don't know which some of the viewers are going to get it, but you're about to get an ad. So brace yourselves, folks. 46 seconds. Should I just pause when it says you're going to get the ad, just so I can so you don't miss anything? I don't know. I don't know how it all works. Anyway, I am still long on Bitcoin. I have no intentions of selling, as I told you, until 2025, when I will unload pretty much all my crypto. We'll see how markets look at that point, but that's the plan. Anyway, I do think you'll get the spot Bitcoin ETF done by the end of the year, and therefore I think you're going to see a nice pop-up here in the crypto space, which I'm pretty excited about. Bring it on. Let's get higher highs going forward. Okay, so let's talk about today's trading. We'll go to the bottom end here, and that was your crude oil chart. So the biggest loser on the day, down 2.10%. And it's still up over the past 2 days. That huge green candle we saw yesterday, over 3.5%. You had a bit of a pullback, a little retracement today. Now, I don't know if it's going to come all the way back down to my red line here, which we have not tested, and that is the 87.38 mark. All in all, I still am bullish, but a nice pullback today in crude oil. Moving on up, gold. This is where it's starting to look pretty ugly. Not only did we break the lower trend line there that was trending up, we also broke this kind of horizontal line. And now the real question is, how low will gold go? If you look here, these lows where it did a double bottom back on March 9th of this year, that's really the next target I have, which is 1819. All right, call it 1820 to be an easy number. Oh, yep. That was only 5 seconds. All right, that's cool. That works. Short ads. I probably get like a nickel for every time you guys watch the ad. Apologize for the ads, but we're going to keep them for a while. You look at this chart right now, not looking good at all. It looks pretty bad. Now, I think it's too late to jump on a short position here for gold, but you might get a retest up to a previous supply zone and then an opportunity to short it. But for whatever reason, you're seeing a good amount of weakness in gold today, at least over the last 2 weeks. 1878 down $12 per ounce right now. And to get to our next target, or at least my next target, which is roughly 60 points lower, that'd be about a 1.8% move. Not 1 point. It'd be almost a 3% move from current levels. That is definitely a very real reality here. So hopefully, I do own long-term gold. I have a very small position in GLD, but I actually have some physical gold, and I'm holding that for a long time anyway. Moving up our list, dollar index, a little bit of a reprieve, right? We were ripping. We gave back all of yesterday's gains, which I was a little surprised to see the magnitude of today's sell-off there, which is part of the reasons we saw this nice bounce. We look at a lot of different things. Look at a lot of different supply and demand zones, and most of the decisions for today for me were based off of this chart right here. We talked about this, that I expect there to be a little bit of a bounce today, and we did get not as big as I thought. I thought we'd actually go a little bit higher, but we might hit that on tomorrow's session. We'll see. I still am targeting that 43.70 mark, which is right about there, where my cursor's at. That's kind of where I was expecting it to go to. I thought we'd have a more aggressive bounce today, just kind of that slingshot type of approach. But when you have the market coming into demand zone, and you had the 10-year, right, going into overhead supply as we did yesterday. It hit it today. These all support each other. So a falling 10-year, the falling U.S. dollar are going to equate to a much bigger rally up in the equity markets, which is that analogy and graphic I put out there yesterday. I had that really cheesy graphic with the tubes, which I should probably revise and make it look a little bit better for you guys. But you had the bond market selling off today. You had the dollar tanking, and of course that acted as a nice catalyst for our indexes. Now, to get to our indexes, NASDAQ was up 0.82%. A little bit of a follow through there. I had a very small trade on the S&P this morning. I did SPY outright, just scalped a little bit, nothing big. But I did play that break above yesterday's high, and I did not want to hold it. I wanted just a little bit, and I thought, I got too much other business going on, so I just closed the trade out for a very, very small winner. Happy with it, but yeah. I still am in IWM. Yep, Mike, I still am IWM. I've got that still massive position. So, this last 2-day rally here in IWM, this is a significant pull back in my profits. I'm a 1.8%. That's a pretty substantial move when you have as many contracts on as I do, but it's okay. I still, as I posted on my Twitter feed, I do expect a bounce. I expected a bounce up from here, a little bounce, and then I do expect that over the next 30 days we'll drift lower. I do think that October is going to continue on rather poorly. If you look at the month here, we're not done yet. We'll do a month show. Let me go to the S&P here. It looks terrible with that on there. There's your monthly candle. We talked about statistics, and going into this month, I mentioned this, that I'm building a short position because of my expectations of September coming to true and being a down month. Well, it's down 3.95% for the month, and I do believe that October will also be down as well. And that's just my hypothesis. Trade it out you want. Make sure you got your stop losses in place if you are wrong. There you go, Pepe. Scalp the NQ. They look pretty much the same. There's your S&P. There's your NASDAQ. NASDAQ slightly stronger today. Obviously, the percentage move for the S&P was 0.56% to the upside. NASDAQ was up 0.82. So, yeah, just a slight improvement there. Now, the big winner on the day was the Russell, which, okay, I'm still going to hold it. I'm a one-man wrecking crew. I'm not a wrecking crew. Definitely not. Chase says if the dollar index can stay above 104 to 105, setting up for 108, euro looks trash. I would agree with you. Here's the dollar index. I have this. You said 104 to 105. Yeah, I think you're identifying this bad boy here as your low point. And that'd be a pretty significant pullback, right? If we got all the way back down there, let's take some of these lines off. If we got to that lower red line, that's a pretty big drop. This would make for a big move up in the equity markets if you ended up dropping down towards that 104.50 mark. But I do think that the bigger picture would be to the upside here. if we got below that 104.50, that's kind of my line in the sand. And I think you can see over here, there's a small little RBR that goes to around 104 and a quarter. So there's definitely some room for a pullback here. It's been really overextended, but per our conversation yesterday, the buck, I don't believe that the buck stops here. I believe the buck may have some pullbacks, but I think the longer-term trend is to the upside, and we'll probably see this head higher. You mentioned 108. Yep, I think 108 is certainly on that, and that's your high point. It goes right back to here from November of 2022. So, yeah, that's the next logical target. I would agree with you on that one, Chase. And then you talk about the euro. Again, if you're looking for investment opportunities here, certainly you want to go long dollar-denominated currency pairs, at least for the short term until we get a new low put into the dollar index. That means things like USD JPY. Right, the yen cratering. I mean, in the last few months, let's go here and to there, the yen has dropped 9%. That's a pretty significant, in 54 bars. So in what, 2.5 months, you've seen this thing drop 9%. That's pretty substantial for currency. The Canadian dollar, now the Canadian dollar at least has shown some strength over the past month or so because the dollar has been dropping against it. The British pound, absolutely cratering against that U.S. dollar. We'll go back even longer term on this one. If you go back to July of this year to where we are right now, down 7.22% in 55 sessions. So the carry trade turned into the scary trade. I like that. That's a good one. The euro as well, right? Even worse. So the euro falling apart right here. That means the dollar is gaining a lot of strength. And if you look at just the chart of the euro, if you're playing supply and demand, we've broken, we're actually right at the lowest point here before it really starts to have issues finding demand zones. So yeah, I'm not a big fan of the euro at all. Swiss franc, US dollar showing great strength against the Swiss franc. So US dollar is real strong. Here's your Thai baht. Anybody wants to go to Thailand, you got a nice move up on this one as well. Sawadee Krap, 8.29% in the last 52 bars. So a lot of these currencies down, 7 to 10% against the US dollar in the past 2.5 months. That's not good. Does the Dixie rally in a recession or drop? Good question. That off the top of my head, Robert, I don't know the answer to that one. Let me just think macroeconomics. I got to put all the wheels in motion here. If we go into a recession, I mean, typically economic slowdown, therefore you're having GDP and all those types of numbers slow down. You would think that the dollar would drop and it would be forced down. Why? Because when you go into a recession, thank you for the question. You made me think on the spot. I apologize. I should just snap on the top of my head have known that, but here's the mechanics of it. In a recession, you're looking at high unemployment, slowing GDP. Inflation doesn't necessarily mean unemployment, but typically inflation would be higher during a recession type of piece. So you've got some economic factors here. If we start to see a recession come into play, like we did back in 2008 and 9, what happened? They cut the Fed funds rate. They dropped the short end of that yield curve as aggressively as possible and pretty much got all the way down to zero. Why? Because they wanted to get that dollar as cheap as possible. By dropping the yield curve from, let's say, 5%, it's 5.5% on the left hand, on the short end right now, if they drop that down to zero, those people who are looking to buy treasuries or government bonds are going to leave and go somewhere else. Why? Because we don't have the big yields anymore. So they will sell dollars. That will push the value of the dollar down. So in theory, from an economic machine perspective, the dollar should decline during a recession because of the actions of central bankers, which will be lowering rates, trying to get that dollar as cheap as possible. There you go. Oh, awesome. Well, thanks, Agent Sancho. Glad we joined live on your feed. I would think there would be a deflation. Oh, yeah, Dave. And that's, it took me a second to kind of, my mind was on a bunch of different things, but yes, that's how it should work, right? If you're going to go and look at a business textbook on what it does, that will be the typical move. Now, it doesn't mean it's guaranteed to fall, but in a recession, the respective governments or political bodies want your currency as weak as possible. You want your currency weak because it will bring in more money into the economy. Foreign goods and services. Foreigners will be buying more goods and services, which will increase production, makes new jobs, and more sales, etc. All right. And we're almost at the top. I almost got to the top there. So we were at the NASDAQ. We hit on that Russell real quick, which doesn't look good for my short position, at least over the next couple of days, but I'm okay with that. We'll see how it ends tomorrow. And then your winner here was Bitcoin with its nice big pop to the upside. Now, there's one other thing I do want to bring up. Since we've seen this significant increase in the 10-year, right? Pretty big move to the upside there. Well, let's scroll down, and I want to look at the inversion of the yield curve. Now, we're going to start with the CNBC yield curve, which is the 10 and the 2. So here you can see we still are significantly below this red line, this green line. This green line is where the 10-year would be equal to the 2-year. But it's still got a almost 50 basis points or half a percentage difference. You earn 0.5% more for owning a 2-year than you would by owning a 10-year. But that gap has been closing. Remember, down here, if you go back to July, we were at over 1%. So we've cut that in half. That's pretty good. I like to see that. That's nice. Well, I do believe you're going to see this continue to rally up here. Again, the short end of the yield curve is not going to drop. So the long end, the 10, needs to be increasing, which it is, and that's closing this gap here on our yield curve. Now, if we go to the 10 and the 1, it's a bit different, right? You got 0.90. That's almost 1%. Now, of course, it was way bigger than that. You had this one spike, which I think is an outlier here. I'm not sure that even got there. This might be just a data glitch. But we were down around 1.6% more for owning a 1-year versus a 10-year. That is a broken system and shouldn't be that way. But the good news for everybody is it's bottomed out. It's starting to cut back up, and now we're seeing the trend rally to the upside. Now, while this looks great, remember, this is a double-edged sword. It's great because this may remove the inversion. We may not see the yield curve inverted, but what it does mean is that the long end of that yield curve is going to be significantly higher. That's going to be very clear on this one, because what means if the 10 and the 1 are flat, well, let's call the 1-year 5.5%. That means that the 10-year is at 5.5%. That's a flat yield curve. Well, for a normal yield curve, you need to have that 10-year higher than the 1, which would make it, 6% for the 10-year? Well, right now you're at 4.5%, and our mortgages are over 7% nationally for 30-year fixed-rate mortgage, which means if we do get to, let's say, 6% for that 10-year, and our yield curve gets back to normal, then you're looking at 8.5%, 9% mortgages going forward. So just throwing that one out there. It sounds great, but it may not be that great for the economy. There's always some, bad side potential to this one. Let's see, what did Pepe say? So I scalp the NQ at the open. I have 2 main rules that I need to fit within supply and demand. Typically, I'm done no later than 30 minutes after the open. I have a full-time job. Awesome. Yeah, it's a great style. I love that style. The only issue you have to have, and again, I say this for people who are looking at that type of style of trading and thinking, hey, I want 30 minutes a day, sounds great. If you're trading a 30-minute strategy, mine used to be 90. Opening 90 minutes was kind of my bread and butter. But if you're trading a small window of time, remember, you typically have to make a couple modifications that most people don't make. And that is, because your window of time is smaller, you have to trade bigger contract sizes or share sizes. The reason for that is, in a 30-minute window of time, you might only get, let's say, a 30-cent move in your stock in that window of time. Whereas if I stayed in that over the course of the day, I might get $1.50 or $2, so I can trade smaller share size or contract size. So typically when you have a smaller window, you have to trade bigger contract size, which can be stressful and risky for those that aren't quick on their feet. So be careful with that one. Yeah, Chase says TLT to 80. Let's talk about this. Man, I keep seeing people saying you got to buy TLT. You can't go any lower. It's like, yes, it can. If the yields are going to keep on rising, you guys know TLT is going lower. It's just simple math. It's the opposite of the yield, and I think yields are going higher. Well, here is your TLT going all the way back into, until 2002. Wow, all the way back to 2002. Our all-time low looks to be right around $80. And as Chase says, TLT to 80. Bloodbath, yeah. There's no reason to think that it won't do that, right? If it doesn't get there, if it gets there, that just means that the yields on the long end have been going up, and we're seeing that longer term. Remember, this is the 20-year treasuries. So that means that the yields on your 20-year and 30-year are getting higher and higher and higher. And that is pretty much, in my book, foregone conclusion right now. I can't see yields falling for any particular reason. Unless we get miraculous numbers from our government with regards to data that would support cutting rates dramatically in the next 6 months, it's not going to happen. I don't see anything out there that would signal that. So yeah, this trend is going to continue. So I would not be buying TLT, that's for sure. I pretty much would stay out of TLT. But it's, a lot of people look at this and go, it's a bond market and it's down from its peak. It's down right now 51%. Yeah, well, bonds are surging right now. The yields are surging, which means the value of those bonds are declining. Totally okay with 6 to 8% mortgages as long as they're consistent. It'll make single family home ownership more realistic and keep exploding prices down. Yeah, well, people survived. I see Lori says, I remember 12+% mortgage rates. People survived back then with 12, 14, 16% mortgage rates. And they had, pretty significant property appreciations back there as well. So it sounds horrible that we have maybe an 8, 9% 30-year fixed rate mortgage, but it will fix and get back to its norm. If you look at the historical norm for the 10-year, let's bring it up here. So typically, when you look at something like this, here's your weekly. Let's see what I get on a monthly. So here's our monthly. I don't know why it does this really weird chart for me, but if you look at really since the candlesticks are formed here, it goes all the way back into 1980, you had 15.8. Now this is the 10-year bond, so it doesn't mean that this is your 30-year fixed rate mortgage, but we've broken the downtrend, which is great. It means, well, I guess great is it's subjective here. Rick Carter said, I'll take TLT when it reaches 80. I'll think about it. I will think about it. I'm not ruling it out, but yeah, I'm not doing anything right now. If we have currently the 10-year is sitting at 4.57, and you're looking at roughly 7.5% 30-year fixed rate mortgages. Actually, let me make sure that I read something that said the national average is right around 7.5. So let me just go 30-year. Where's TJ when you need him? All right, bring this one up here. Oh, jeez Louise. Check this out. Ouch. 30-year fixed 8.3%. Of course, that's in California, 20% down, and a horrible credit score. So let's go to the apex of the pyramid. You are an 800 credit score. That's over 7.7%. Yowzers. That is pretty significant. And remember, it's 7.7, and it's based off the 10-year. Well, the 10-year is at 4.5. So I'm adding 3% to it. So if this does jump to 5.2, which I think is very realistic. I think that's actually probably to see that by the end of October, maybe. That means you're now looking at 8.2 to 8.5% for your 30-year fixed rate mortgage. That's another full percentage higher. Ouch. Yeah, TJ wants to be paid. I couldn't pay TJ for free. You think Nike? Yeah, let's say Nike. Let's go NKE. I know they came out with earnings. I did not check that one out today. Oh, up 6%. Yeah, we'll call that a popcorn. Why not? Let's go to 5 minutes. And let's go and show you the after hours here. Oh, yeah, looking good. I would, dare I say, Nike's kicking butt. There's a shoe reference there, but I'm dumb. Thanks, guys. All right. Let me see real quick. There's one other thing I wanted to bring up here, which I know I got to wrap things up. I keep trying to wrap up the show at 30 minutes, and you guys just don't let me do it. You just won't let me do it. That's fine. Coach said, why does TLT work in the opposite way? So you have two factors that drive bond prices. Number one is the yield. How much do you get paid for buying those bonds, right? You're essentially making a loan. So let's say you get paid 5% and the par value is $1,000, right? So you're buying a 5% bond for, let's say, 10 years, and it pays you 5% per year, and it costs $1,000 to buy it. If all of a sudden next year, right, so you bought a 10-year bond, you now have 9 years left, the rate is now 7% for that same bond. Why would someone pay $1,000 for yours? Why would they buy your bond for $1,000? Why? It doesn't make sense. Your bond that you have that's worth 5% yield is not worth as much anymore, because I can spend $1,000 and buy a new one and get 7% yield. So what happens is the price of your bond now has to be discounted, right? The value of your 5% bond drops. It's no longer worth $1,000 par value if you try to sell it. It now might be worth $800. So the value goes down on the price of the bonds as yields go up. So what we're witnessing on things like that 10-year, anybody who bought bonds back here in, 2022, 2023, if you bought bonds over the last 2 years, 3 years, if you bought a 10-year bond at any point in the last 3 years, your bond's par value is dropped. It's no longer worth your $1,000 that you paid for it, because someone could buy a new bond today and get a higher yield. That's why they're inverse, right? They're just backwards like that. In the 1980s, my parents had 2 loans over 12% and a balloon payment while living in Irvine. Volcker crashed the market twice in that time. I'm good with 6 too. Actually, I'm really good with my 287. I'm fine with that. There we go. I'm on the MXC long. Let's go. CLX, are you on the micro? CLX 2023. I don't know if it'll give me this one. Oh, there you go. There's your chart of that one. 9163. Let's see. Long at 9163. So this is on the daily. Let me go. It looks like you're on a shorter time frame here. So I'm going to go to an hourly just so I can see those numbers. All right, so you bought that pullback. You're long from 91.63, so you just bought in a little bit early. I would have jumped. You pulled the trigger like right as it got to that demand zone, maybe just a little bit before it. And yeah, I've got multiple questions coming in. Hold on. First target, stop loss. Let's see. I'm long at 91.63 is my first target. No, you can't have that as your target. Oh, got it. Never mind. Sorry, Eric. I was reading the question wrong. So 93.25 is where you got your first target, and that was going to be. I would actually go lower than that. My first target would be just before you get to 93. I would do 92.90, and the reason for that is whole number psychology of 93 plus that's the origin of the last big move down. And then your second target was 95.68. 95.68. Well, you're going past this high, and you have to go to a longer term time frame. I would be targeting 94.50, just based off what I'm seeing here on this micro crude. All right, do you get your $1,000 back upon the bond's maturity? Yes, right. But here's the thing, John. It's a good point. If let's say you bought that 5% bond, and you've got 9 years left. Well, you know you're going to be getting 5% for the next 9 years. Great. And at the end of that, your bond is worth $1,000. It's if you want to sell it early, that's where you would lose your value. And why wouldn't you want to sell it early? If you feel like the bond market, the yields are going to keep on going up, then your 5 is terrible. Why would you own a 5 when you can buy a 7 or an 8 or a 9 for the same price? There we go. All right, I got to wrap up. Tomorrow, it's Whiskey Day. I'll be looking forward to that. Earnings-wise, there's really nothing big on the earnings calendar. On the economic calendar, you do have a few things happening. So it's usually quiet on Fridays anyway, but I'll bring that one up here. Here is your calendar. You can see for the Canadian markets, you got GDP. The big news for us is core PCE price index. That's expected to stay at 0.2%. I don't know. Some of the most recent data showed a little bit of a pop up, so I almost feel like this might go to 0.3. But right now, expectations are the core PCE price index will stay at 0.2%. You also have personal income. They're expecting that to increase. Personal spending going down. These two formulas right here are awesome. If these numbers do come out like that, that's actually very good for our markets. That means that people are making more money and they're spending less of it, which is what we should be doing for every one of us. Let's see if those numbers actually come out. And then you have the University of Michigan Consumer Sentiment Report, and that is pretty much it for tomorrow's session. So if you guys have something you want me to discuss, topics to go over, I did have a couple questions I still need to get to, but I got other things I need to take care of. So there we go. You got a pixelated Merlin? I do that every now and again. I'm just digital. I'm not even a real human being. I'm AI right now. I programmed into AI, I want a bad t-shirt from Game of Thrones. I want to have a 3 o'clock shadow and disheveled hair and look oily. And the AI created this character right here for you. It's amazing. He talks just like the real Merlin anyway. Hey, Koja, thank you very much for that. I appreciate that. That's very nice of you. I will put that into the whiskey fund. Or as Tom says, I should put into advertising for the show, which I may actually start to do here going forward. All right, I'm not going to make an hour show. Thank you guys so much. Laser engraver. I do like laser engraver. You guys are funny. I could just keep on going, but I got to wrap up. So, guys, thank you so much. Hope you enjoyed. Hope you learned something. Keep your eye on this man right here because he is in the hot seat right now. Charcoal grilling under his butt as he is being put under so much pressure. I do not envy him at all. Honestly, I would just walk away and resign if I was him. I would not want this responsibility because everybody's targeting him right now. He's not getting a lot of support, so... Poor Gary Gensler. That's it for me, everybody. Got emails? Send them at TraderMerlin@gmail.com, or you can go put them down below any of the YouTube videos. I always respond to the comments out there as well. So thank you guys so much. I will see you mañana. Take care.